Hey, everybody. Jeff Gibby. I'm joined with Jake Bernstein. I want to say welcome. Thanks for watching this. If you are watching it on YouTube, hit like and subscribe. It helps a great deal. Helps us get the word out, get the message. We do all kinds of content on our YouTube channel, including this interview format like this, shorter webinars, all week webinars, lots of great stuff that we're delivering there. If you like, it really helps us get the message out. If you subscribe, it helps you be informed of when we release new content. So in any case, thanks for watching. Thanks for being part of today's video. Let's go ahead and get started. So as you can see, my guest today is Jake Bernstein. You can find Jake at www.tradefutures.com. Before we get started, I'm going to read a legal disclaimer because it keeps our lawyers happy. I will also add, if you're watching this live, welcome. Make sure to ask questions, say hello, all that kind of good stuff in the chat. If you have questions for Jake, let me know, and I'll pass them through to him. Okay.
Jeff, you on mute.
Well, hello. Let's start over. Can you hear me now?
Yeah, I can hear you.
Okay, dang. Well, I just said a whole bunch. Let's go ahead and kind of just recap that real quick. Welcome to the show. Make sure to say hello. If you're here in person, we'd love to see that. If you have questions, make sure to ask them in the chat. If you have questions for Jake, Jake's our guest today. What I want to do is, if you're also watching this in the future on YouTube or on one of our social medias, make sure to like and subscribe. It helps a great deal. We appreciate it. And we're always releasing information. Sometimes we do big, huge conferences. Sometimes we do little lessons. But if you like and subscribe on YouTube, it'll help us get the word out to more traders. And when you subscribe, you'll be notified every time we do an event. So thank you. Thanks for being here. Our guest today is Jake Bernstein. I'm going to introduce him in a little bit more detail after I make our lawyers happy. Hello, Maverick. Thanks for the audio check. Hello, Greg. Welcome. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins and is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock, the Traders Forum LLC, their employees, and their guest speakers disclaim all liability for any investment decisions by investors based on the use of their software, trading strategies, or any information provided in connection with the company. Metastock, the Traders Forum LLC, their employees, and guest speakers do not endorse the purchase of a security, nor are we endorsed for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Always fun. Jake, does it sound like I've done that a few times?
A little bit.
I could recite it from heart almost. If you haven't yet, I would encourage you to come up, join our Traders Forum. The Traders Forum is a free community that we've put together. It's free to join. You can chat with other traders, learn about the markets. There's a lot of technical analysis resources. We do a lot of events like this. We talk about a lot of different technical indicators. All that you can do for free at thetradersforum.com, www.thetradersforum.com. And if you ever want to find out a little bit more about Jake, I'm going to talk a little bit about Jake right now. Jake's, you can find his website at tradefutures.com, rules-based, trade-futures.com. Thank you. And we just fixed that too. You also can email him at rulesbasedtrader@gmail.com. I want to talk a little bit about Jake. Just so you kind of are aware of him. Jake's been a good friend of mine. I used to live not too far from him. We'd go and we'd attend the trading options for profits group together. He likes fast cars. He likes gardening. And he's just one of the coolest guys I think I know in the market. But he comes with a seriously very good pedigree. So if you're not familiar with him, he's a pioneer in the trading industry and market education. He did his first trade in the late 1960s. He's offered over 40 books and published a weekly trading newsletter that's been continuously trading since 1972. He likes to blend in technical precision, psychological insight. He has a background in clinical psychology, and I think that's uniquely shaped his trading philosophy. He's the developer of many trading systems. He developed kind of an acronym that I really like that's called setup, trigger, follow through. I think when you're trading, it's really, really important to kind of have a very specific process that's objective and not subjective. I think Jake would wholeheartedly agree with me. He's been just a great partner of Metastock, somebody that I absolutely enjoy working with. And we've had him as a guest on the show before. We did, what was it, November that we did the last one?
I believe so. Yes.
Okay. I think it was back in November. If you missed that one, we'll have a lot of follow-up questions from kind of that one. It was also a very, very good one. So, Jake, welcome. We do have a comment from Tom Petty, who, I don't know if you're familiar with Tom Petty, but I really like his music. Tom Petty says Jake's the best. So,
Well, thank you, Tom. I really appreciate that.
that's what I have to say about you. So, what do you have anything that you'd like to add, Jake,
Yeah,
in terms of?
let me say a couple of things about you guys.
Okay.
It has been my pleasure, my privilege, and my honor to be working with Metastock in one capacity or another for many years.
Mm-hmm.
Jeff and I have we've seen each other all over the world. I think the last time probably was in Silicon Valley, but also in Singapore and so forth. Or was it in Hong Kong or Singapore? I can't remember. But you guys never pressure. You always give good quality. It's clean. It's correct. It's organized. It's visually beautiful. Just to love the opportunity, and mostly I love working with you, Jeff, because you're so laid back.
Oh,
You got a great sense of humor, and must have to admit I was very sad when you moved out of the area.
yeah, that was kind of a hard bit of a move for me, but yeah, I appreciate that. Um, let's kind
And
of start with a little bit of I'm looking at the Dow chart right now, and I think it. Do you have any feelings on kind of where we're at right now? We're recording this. It's 6/26, 2025. Dow's pushing a little bit kind of higher. What are your thoughts on the market? Do you have any real expectations of the market going forward?
everything that you're showing on the screen couldn't be more perfect. We
Okay,
start
good.
we started an uptrend where the cone at the bottom of the screen turned green. We have been in an uptrend since then. Do I have a pointer here that works?
No, but I've tried to point.
So, people talk about short-term trading, day trading. The world's just on fire with people who want to day trade. They don't understand that the big money is made in the big move. Even if it's a day trade, you're not going to make a lot of money unless there's a big move. And the big move has to be compensated for with a large position, which many people can't do for day trading. So this move, which started at the beginning of the cone at the bottom where it turned green from red,
Right here.
yeah, it's been consistent ever since then. Every time we've come down to the bottom of the moving average channel, the moving average is on top of the screen. We've come back up again. Oh, it's still a bull market, very strong bull market, and I look for even higher prices. Naturally, we got to get a correction here soon, but there's plenty of news out there to give us the corrections we need.
Yeah, always when we show charts, kind of talk a little or get questions about kind of what indicators we're looking at on this on the chart and stuff like that. So right now, I think what we'll do is we'll kind of talk a little bit about here. This right here is a standard Keltner channel. You've got the 10 high, the moving average simple 10 high, and you've got the 8 low. And in addition to that, we've got on this chart a 20 simple. Is there anything in particular you want to talk about with those particular indicators?
The essence of my methodology, moving average channel, is the 10 high, 8 low, and it is triggered by Williams accumulation distribution in the middle of the screen, the green line above the red line. And so that combination there is the moving average channel, very effective in any time frame, and certainly not perfect, but it always tells you what to do. You always know the trend, you always know the support, the resistance, you know where to buy, you know where to sell, and most important of all, you know where your risk is and where your profit targets are. So it's a complete package with with your expert advisor, it can also point all these out to you before they happen. So
Okay, go ahead and open that up too. Okay, and then here we've got the Williams accumulation distribution. Can you talk a little bit about how you're using that?
yeah, it's named after my good friend Larry Williams, who's been in the business for many years. And it's combined with a 57 simple moving average. That's 5-7. So the red line is a 5-7 of the green line. And when the green line crosses above the red line, we get our trigger. So the first part of the process, setup, trigger, follow through, is where you go above the moving average, 2 bars in a row completely above the moving average. If you go up to the channel,
Mm-hmm. Okay, right here, where we're up above the moving average for 2
right,
days.
you have
Mm-hmm.
two complete bars above the top of the channel. And then you get Williams above its moving average. That clinches it, gets the trigger. And from that point forward, we're in a bull trend and nothing's changed.
Okay, that's simple enough. And then right here we've got this, and I like to call this the Swiss Army knife of indicators. Do you want to talk a little bit about what the expansion contraction channel is?
Yeah, it's a method of determining by overbought, oversold, using standard deviations, the strength or weakness of the method of the trend. And so when the cone, which is a part of the bottom of the screen, changes from green to red or from red to green, we get a buy or a sell. And it's very consistent. It doesn't oscillate back and forth and whip you to death the way many of these moving average systems do. So where the channel train changed from when the cone changed from red to green for 2 consecutive postings, we go along and we just keep it for the entire duration. Now, sometimes that band at the bottom of the screen will get very wide, as it did a few months ago.
Right
That,
here.
yeah, that's an indication of overbought, oversold. Oversold, even though I'm not crazy about those concepts, but still they do apply.
Right, okay. Let me just kind of talk a little bit. I'm going to clarify me if I'm wrong. But when we're looking at the color of the cloud right here, it's red. When it goes to green, that's gives you your initial buy signal.
Correct,
It's also looking at the overall trend of the market. Would that be safe to say?
correct.
Okay. So right here, when we kind of break down what's going on with this indicator, we say the long-term trend is bullish. That's referring to the fact that it's a green cloud. And then when we say it's strong, it means that this cloud is not contracting. It's getting larger at that time.
Right, right.
Okay. In terms of the short-term trend, those are kind of the inner channel here. The lighter green and red lines. I'm just going to make this a little bit bigger so we can kind of talk about it. Now, you can keep this pretty simple. Like you just saying, hey, the buy signal is when this comes from green to red, but the shorter term trend is when the green is above the red.
Right.
Okay.
What I like to do, Jeff, I don't like to complicate my life.
Mm-hmm.
Age, I don't know how much I've got left, so I want to use it more efficiently. So
Right.
I'm only going with the major trend changes. I'm not looking at inside the cone. I'm not
Mm-hmm.
looking at the little red line and the little green line crossing. That's too short term for me, even though I did write the 5 best books on day trading, and there's no longer time for that.
Yeah, yeah, yeah. There's more important things to do with your day.
That's right.
Right, cool. Let's talk a little bit about I'm going to jump into some of the questions that we've got here. When we talked last time, you talked a little bit about the virtuous cycle of confidence, of discipline. Is there any time where you broke that cycle, where you kind of found yourself going the other way? And if so, can you talk a little bit about that?
Yeah, for the first 15 years that I traded, I broke that cycle.
Okay, you're going the other way in the in the Zen circle, right?
Exactly. Well,
Okay.
people say, Joe, no wonder you can't make any money trading. You need to get discipline. So Joe says, that's right, I need discipline. Where the hell am I going to get discipline? Well, you're not going to get it by reading a book. Even though I wrote my first book, The Investor's Quotient, which is about psychology, that's true, but you can't find psychology in a book. You can't get it from a psychotherapist. You can't get it from a counselor. You can't get it from a priest or a rabbi. Where's it going to come from? It's going to come from confidence. Confidence means you know what you're doing, or at least you feel like you know what you're doing. And the reason you feel that way is because you've seen the results, either the real results or a back test. So if you have the confidence which comes from information. You'll have the discipline. If you have the discipline, you'll do the trades according to the rules. If you do the trades according to the rules, you won't always be right, but you'll be right often enough to give you confidence, which will inspire you to have more discipline. So that virtuous cycle improves things. And the best way to do that is to start out very small. I say to people, if you like your methodology, trade one share, take the challenge, trade the next 10 trades with one share and see what happens. Your stress level will be low because you know you can't lose a lot of money. You'll see it working. You'll see if you understand the rules. That will give you confidence, which will give you discipline, and so on and so on and so on.
I like that. What would you say to somebody that's had like maybe a string of losses and has a lack of confidence? Is there kind of a trick that you would use to build confidence after maybe a string of losses?
Yeah, if you fall off the horse, get right back on the horse. But if you don't have confidence in your strategy, you're not going to want to get back on that horse. Confidence in a strategy comes from having something like Metastock. You can go back and say, look at these last 1,400 trades. Out of the 1,400 trades, they've been right 79% of the time. That gives me confidence. So it's a question of having the facts. The facts are very important. Example, you talked about my fast cars. People come over to my house in the mountains and they say, hey, Jake, I love your fast cars. Can I drive one? I say,
No.
do you know how to drive that car? No. Well, you're not going to drive my car because you're either going to break my car or kill yourself, and I don't want either of those things to happen.
And they're not mutually exclusive. You can do both.
That's right.
I never had enough confidence to ask you to drive your car.
I'll let you drive a real fast car.
When you talk about setup, trigger, follow through, I really like that because it talks about kind of the setup. It talks about a specific trigger. All of your methods really talk about that. When you talk about follow through specifically, to me, that means like, okay, I'm going to look for, I might have a profit target. I might have a trailing stop loss. I might know exactly where I'm going to buy. What elements would you consider? What elements of the whole STF model, the setup, trigger, follow through, do you feel are missed by most traders?
Profit maximizing strategy.
Okay.
Because what happens is traders lose so many trades, so many times they trade. When they finally show a little profit, they say, oh my God, I can't believe it. I finally got a profit. I'm going to get out before it disappears. They take $400 off the table. They feel pretty good about it. And then the next day, that trade would be worth $4,000. They say, why the hell did I do that? Why did I get out? So the profit maximizing is very important, not to underestimate the importance of knowing your risk, but the importance of knowing your profit potential and how to maximize it. So what I say to people is on that last position, put your stop at break even, let it go, and unless the indicators change, keep that trade forever. And I can give you an example from my own trading.
Okay.
About a year ago, I started trading a stock called Palantir.
Oh, okay.
It's a beautiful stock. It gave all the right signals. And then when it jumped one day, $10 a share overnight, I said to myself, I got to take this money and run, which I did. PLTR, which I did. And then it proceeded to go to $140 a share, which it is today, even more than that. And I regret every time I sold that stock all the way up. I'd buy it, then I'd get out, I'd buy it again and get out. Broke all my rules, and I deserve exactly what I got. I mean, I made money on it. I can't complain about that. Can't complain about that.
Mm-hmm.
I'd be much better off if I had just left the darn thing alone and followed all my rules. So I do make mistakes from time to time.
I have it. Yeah, we all do, I think. Let's see. But this is a great stock. It's one that we trade all the time. Do you? We talked a little bit about. Okay, I want to ask you this question. You talk a lot about seasonal trading. You talk a lot about expansion and contraction. Do you have a favorite method when you're trading? Is there like a go-to bread and butter strategy that you like to use?
Seasonal trading.
Okay. And your website for that is, remind me what that is. It's seasonalswing.com?
Seasonaltrader.com.
Seasonal. Let me put this in the show notes here. I'll also put it in the chat here. Do you want to, I'm going to give you an opportunity to talk a little bit about that website and what it does. Do you want to?
Absolutely. And let me say it at this point, I have already made my fortune. I don't need anybody's money. That's for this. But I do offer specific methodologies that help people make money. Seasonal Trader is one of them. So what you can do at Seasonal Trader is go to search a stock and say, example, you can pick IBM and say, in the last 50 years, have there been any repetitive patterns in IBM? If there have been, it will find them for you and give you the odds and show you every time that pattern happened. So you'll know exactly what to do. It's one of my favorite methods because the probability is extremely high and you can search on any aspect that you like.
Is there one sort of a seasonal pattern that you look forward to every year?
There's one coming up the first 2 weeks of July. First 2 weeks of July, going back over 100 years, have been two of the most bullish weeks of the entire year. And that would constitute, as what you said before, a setup. It's a seasonal setup. That's not going to happen every year. So when we use a trigger that says, yes, the trend right now is such that it will happen, so we can increase our odds from 77% to 85% that the probability of the move is going to happen. So it's the first 2 weeks of July that are very important. In fact, even the first few days leading up to the 4th of July are usually very bullish percentage.
We're talking about next week for 4th of July. What is there a particular instrument? I think I missed that part of it.
It'll be either the QQQ or the S&P or the DAP.
The market in general.
Okay. Yeah, the market indices in general. And of course.
So it would be safe to say that you're not a fan of the seasonal pattern of going away in May.
Definitely not, because again, statistically, sell in May and go away does not work.
Okay. Let's talk a little bit about your method for looking at systems. Do you find you're still kind of tweaking and playing with the systems that you're using, or do you find that they're kind of set?
They're kind of set, even though I do come back to them once a year and ask the question, have they continued to work? Do they need any, as you say, tweaking? And sometimes they do, because the overall underlying economic realities change. So we're not always going to be in the same economic environment, which will affect prices, which will affect supply and demand, which will affect seasonals. So it's not perfect, but tweaking is required sometimes, just like you would take a car in for a service call.
Right. Okay. Cool. When we talked the last time, you talked a lot about leveraging in and using micro contracts for trading. Do you do that yourself? Do you scale into futures positions? What is kind of the process that you use if you do?
My process is very simple. First of all, let me say this. Micro contracts are a godsend to the new trader. Definitely trade micro or mini before you do anything with the big price contracts. I like to buy or sell my initial position on the first triggers. And then I like to add on the way up or down at the moving average channel. So I might get my buy trigger, then I pull back into the channel, a buyer at the bottom of the channel, then I get another opportunity to buy outside the channel. So it's a process.
And what do you have any sort of recommendations you can give about protecting yourself from emotional or financial damage during a drawdown in an open trade?
Well, I'm a firm believer in the first profit target and getting out of the danger zone. Okay. So if I have an opportunity to take some money off the table, keep part of my position, reduce my risk to zero, I will always do that, because that for me has been the secret to success. And by the way, when I look at my trades at the end of each year, I'm always noticing the same thing almost every year. The big money is made in the big move, and the big move only happens about 10 to 20% of the time. So I accept the fact that 80% of my trades are going to be a wash. Going to be some winners, some losers, some bigger winners, some bigger losers. But it's the monster trades that have always done it for me.
One of the things you said, you joined us on Monday for like our online trader summit that we did. But one of the things that you said that really stood out to me is that big moves take time. How long do you generally find it usually takes to make a big move? Are we talking about months, years, decades?
Ask Warren Buffett.
Okay. All right. He's not here.
Yeah, time is such a relevant thing.
Mm-hmm.
A short-term trader, 6 or 7 days is a long time. For an investor, maybe a year or two is not a long time. So again, for me, I still own stocks. In fact, I'll tell you a funny story. I have an office mate, a lady who's been with me ever since I started. One second.
Yeah, go ahead.
A lady who's been with me since I started my business in 1972, who's been owning Apple all the way up. Every time Apple comes down, she buys more. She's got thousands of shares of Apple, and they've done really well. And one of these days she'll get out, but that is a long-term trade.
Mm-hmm. Is that Maryland?
It is Maryland,
Oh, yeah, Maryland's awesome. We love Maryland. Very, very nice.
Thank you.
Do you think there are misunderstood risks that traders face when they're trading commodities?
Misunderstood, yes, because many people don't know how to place orders. They don't know what orders mean what. They're afraid to put in certain kinds of stop orders thinking they're going to get picked off. So I think it's important to understand that. In addition to that, a lot of people don't understand the concept of a locked limit. In other words, the market will go up and they'll stop trading by the exchange rules. And if you're long or you're short, if you're long and it's a limit up move, you can get out. But if you're short, you can't get out. And so those are some of the risks that people are not aware of. And sometimes it takes them by surprise. There's also the risk of delivery. If you keep a trade for too long into the delivery period, most of the time the broker will blow out your position if you don't do something. But sometimes you have to what's called retender, which can be a costly process.
And that's where you're forced to take delivery of a security. Can you kind of describe retender a little bit more for what it is for us non-commodity traders?
A real life example. I was long about 10 contracts of cattle futures.
Yeah.
That I did not get out of on time. They gave me delivery. I got a notice in my account that says you're going to own $450,000 by taking delivery of these cattle contracts. I said, what do I do now? Broker says, well, you've got 40,000 cows on a feedlot in Iowa. I said, great. What am I going to do with that? He says, well, we'll have the farmer who takes care of those animals call you up. He calls me up. He says, what do you want to do with your cows? I don't know. So I one of my choices. He says, well, it's going to cost you $3,000 a day to give them medication. I think I better take him to market for you. Then what happens? Well, we'll sell him. We'll give you what's left, or you have to owe us money. Not a pleasant proposition.
Mm. Yeah. You kind of alluded to the cattle delivery before in the last conference or the last time we talked. So I was wondering if I'd hear that story.
Yeah, I don't think that can happen anymore because I think now everything is cash settlement. They just have to put up the cash, but don't take delivery. Don't even get close to it.
I want you to talk to us a little bit about what your daily sentiment index is and kind of what it measures and how you use it.
Sure. Many years ago, when I owned part of a brokerage firm, we noticed that some of our customers were always losing money. When I say always, I mean some of them 100% of the time. So we're thinking, well, if they can be wrong such a large percentage of the time, maybe we can capitalize on that information and sell when they're buying and buy when they're selling. At that time, it would be unethical to do that. But when I got out of the business, I started a survey. So every day we asked, are you bullish or bearish? And we try to find people who were very new to the markets. And we noticed that when they were in 80% agreement, bullish, it was usually the top of the market. And they were 80% bearish, that was usually the bottom of the market. So we created an indicator called the daily sentiment indicator, which is based on people's opinions. We only want to know what the small trader, the inexperienced trader, is doing, and then we want to do the opposite with timing. So in the scheme of things, sentiment is a setup. It says the market is going to top because small traders are too bullish. Well, for some reason, some very large hedge funds started to use my indicator. Then it spread like wildfire throughout the business. And now 90% of our clients who get that index from me every day are big hedge funds and brokerage firms. The small trader is not interested in that information, but the big trader is.
When can I ask you when the last time you got a 80% agreement on the the daily sentiment index?
Yesterday,
Yesterday. Okay.
for
So it's
S&P,
for the S&P. And was it 80% felt like it was going down, or 80% thought it was bullish?
82% to be exact, were bullish, which basically says, listen, a top is coming. We could be a few days early, but get prepared for a sell trigger. It doesn't tell you how low it's going to go, but it does. It's a red flag. It's a warning
Mhm.
sign.
Right. Okay. So that would be the setup. Is there anything that you'd be looking for the trigger?
Then we start to look at intraday timing for the trigger. For example, the intraday expansion contraction or the intraday channel or
Mhm.
intraday divergence.
Okay. And is there a time frame that you prefer when you're looking at intraday?
At like 6 hours.
Okay. All right. Very cool. Thank you.
You're welcome.
You also talk a little bit, and I want to kind of because you're so diverse in kind of the areas that you like to focus on. When you're trading futures, you like to talk about commercial activity and commitment of traders. I just kind of wanted to kind of drill into that a little bit, if you don't mind.
Sure. Every week, the Commodity Futures Trading Commission publishes a report called the Commitment of Traders. They divide traders into basically three categories: large speculators, small speculators, and commercials. Large speculators, commercial and small speculators can change their minds very quickly, but commercials, who are the people or the enterprises that basically control the markets, who use the stuff that's being traded, I want to know what they're doing. And so when we track the commercials, we find that they accumulate very large positions on the way down in anticipation of an up move. And then when the up move happens, they start to unload their contracts. So they're the most significant players in the market, and we always want to know what they're doing. As an example,
Okay.
if you look at Palladium, and I don't know if you guys have the COT programmed in Palladium, commercials have been buying the market for 3 years.
Do you know what the symbol is for Palladium? I don't pull it up very often.
On my indicators here, it's PA2.
BA? Okay.
PA. P is
PA.
in.
If I could type. There we go. I got it.
So you see the market has started to move up. That market move that's in process right now has been building slowly but surely over the last 3 years. And about 3 months ago, commercials had the largest long position in history. Why? Because they felt that a big up move was coming, and that move has started. And so now on the way up, they're going to start unloading their contracts. Because remember, commercials are not in the game as a speculation. They actually need the stuff.
I found a better symbol. The C one was a little bit choppy. The volume adjusted
Yeah,
is actually a lot better.
you can see what's been happening here.
All right. Is there any other commodities that you're particularly interested in right now?
Soybean oil.
And that's SO, right?
I think it's BO.
We'll give it a go. Yes. There you go.
Right now, you can't see it on you can't see it on this chart.
Mm-hmm.
But commercials have actually been buying soybean oil futures very strongly for the first time in a long time.
I might have that template installed. I may not. Let me check real quick.
I know you used to have it.
Yeah, I don't have it here. I don't have it on my demo machine, but I do. We do have the ability to display these commercials on a chart, just not right now. So.
Yes. So commercial activity is very important because they represent the organizations, the firms that actually use the stuff that's being traded. And ultimately, that's the final indicator of supply. Excuse me, of supply and demand.
Another question, we could kind of talk a little bit about seasonal patterns and sentiment. And if I heard it right, the seasonal pattern that's coming up for July may be very bullish, but the sentiment that we're seeing might be bearish.
That's right. We need to set up, trigger, and follow through. So
Okay.
we have a bullish seasonal, but if the small trader is too bullish, that seasonal might not last very long. It might just be a blip for a couple of days and then down again. So again, it's a question of setup.
I might have lost your audio. Jake? Uh-oh. Here, let me do this real quick. Yeah, Jake, I don't know if you can hear me anymore, but I seem to have lost you. I think Jake?
Yeah.
Okay, there you are. We lost you for a second. Cool. So always, even in, would that cause you to be more conservative if you're getting one reading here and one reading here, or you just, once you get the trigger, that's the direction we're going to go?
Yeah, once I get the trigger. But remember, if the market is trending down and it should go up, you're not going to get a trigger. So you're not going to do the trade anyway.
Yeah. Okay.
And by the way, on this chart, let's go back to the bean oil chart.
Right here, the soybean oil?
Yeah.
Okay.
You'll notice that in the last week or two, we've had 2 days where soybean oil is actually limit up. I have not seen something like that in decades. For soybean oil futures to move up the limit is a very rare event, and it was followed by massive accumulation of long positions by commercials. And that's very important. Remember, we're talking about what's going to happen 2-3 months down the road, not the next couple of days.
Right. Okay. Very cool.
Commercials have also been buying corn, and they've been buying soybeans, two markets that are right now very out of favor. So if you put the soybean chart up, you see that it's been moving down. Corn's been moving down, but again, it's all about anticipation. We're looking for a certain pattern to develop, and the beginning of that pattern is accumulation by commercial traders, which is happening as we speak.
And I like the way you kind of talk about that. I'm going to kind of go in and just, when you talk about commercials and why they're important, because those are the people that are on the ground. Those are the people that understand what the industry is doing. Those are the people that, if they're making decisions that they're going to accumulate, they're more likely to be in the know than, let's say, the retail traders in the other categories. So have I summarized that okay?
Yes, in other words, they're the ones that are getting their boots dirty.
Okay. Gary wanted to make sure that we were talking about Palladium a few minutes ago. We were. Butterfly says, followed by what in a few months? So, like when we see this accumulation of buy commercials, what are you looking for your trigger? If we can get a little bit more specific about
Yes.
it. Thanks, Butterfly.
Yeah. When commercials stop their buying activity, that's usually when the move starts to go to the upside. We also use the moving average channel weekly. So when we look at the monthly commitment of traders and then we follow it up with a weekly, that's our trigger.
Cool. We talked a little bit as we were kind of getting ready and making sure all the audio was working, all that kind of good stuff. But we talked a little bit about ChatGPT in particular, but AI more in general. And I kind of talked a little bit about how I was using it to kind of put together YouTube timestamps and summaries of what is talked about and that kind of stuff. And I'd asked you if you're using AI in particular around your trading and what you're doing with trading, and you said yes. Can we talk a little bit more about how you're using AI right now?
Yes, I'll give you a very specific example.
Okay.
For many years, traders have said that years numbered 5 in the stock market are bullish years. So I went to ChatGPT and I asked the question, is it true that years numbered 5 have been bullish for the Dow Jones? It came back and said yes, 70 to 80% of the time. It's been bullish. So I asked a further question, what triggers that bullish move? And they came back with an answer and said, you need to look at the January high and the January low in stocks. If we close above the January high 2 consecutive months, you usually get a big bull market. I went through and tested that all the way back to 1895, and it is absolutely true. So it helped me find that pattern. I had to know what the pattern. I had to know what the pattern was, so it could start looking for it. So
That's
it's
cool.
the difference between me and ChatGPT. But you have to you have to be careful because sometimes ChatGPT will hallucinate and tell you things that never happened.
Right. Yeah. There's all kinds of stories about that. Some guy in New York used it to create a court document, and it made up case law. It just fabricated case law. He wasn't very well received by the judge, I would say. Let's see. Okay. In a scenario, let's say you're a brand, let's say you're giving some advice to somebody that's brand new to trading. Let's say they have a laptop, they've got 10 grand. How would you recommend that they go about starting a trading career?
Wow, that is a tough question. Find a market that you like. Find a market that's not too volatile, such as treasury notes, treasury bonds, corn, something like that. Then research a strategy that makes sense to you. And don't begin as a day trader. Think of yourself as a short-term trader. Research a strategy, such as seasonality, and then begin trading it. I'm not a very big proponent of paper trading. Paper trading does not teach you very much in terms of the emotional side of trading. So paper trading, very briefly, just to make sure you understand the rules, then get into it for real with real money. Otherwise, it's not going to mean anything to you. I say it's like living with someone before you get married to them. You don't find out any of the bad stuff until after you make the commitment.
Yeah, after the honeymoon, right?
After the honeymoon, right?
Okay. Uh, last time we talked a lot about your egg trading futures days. I know you're kind of a little bit of a deadline, so we need to kind of start to wrap up. But I wanted to know how since you started trading eggs, how could you iterate that your ideas about trading have evolved over the years? Obviously, you've got a ton of history.
I realized that there are specific patterns in the market. Those patterns are consistent, going back many years, that I needed to test those patterns on the computer. Before the computer was available, I tested them by hand. Then to apply them in real time with very small or low risk positions and develop the confidence cycle that we talked about earlier today. And then to jump into the water and do it for real. But the most important thing I learned was this: take the money out of the market and put it into other investments. Otherwise, it's going to be like a yo-yo. Many traders are high up on the flagpole, then they come all the way down and go all the way back up again. That's not for me. So for me, the market is a vehicle for proving theories and patterns. And once I've proven those patterns and theories is profitable, I put my money into it, take the money out of the market, and put it into something very, very stable like real estate, which is where I've made a lot of money.
Here's a really interesting question from Butterfly. Do you believe in asset allocations proposed by financial planners? So do you believe in, as you get older, you should go less out of stocks and more into bonds? I really like that question. Thank you, Butterfly.
Yeah, there's a lot of good economic sense to that. Because certainly at my age, which is 78, I'm happy I did it the way I was supposed to do it by lowering my risk and so forth. So yeah, I think there's some good common sense to it, yes.
All right. And I think one last question. Is there anything that you kind of really, really believed early in your career that you've changed your mind about?
Yes, that there was trader psychology. Do not confuse the psychology of the trader with clinical psychology. So just because you're a nervous person doesn't mean you're going to be a bad trader. Just because you're a good trader doesn't mean you're not going to have psychological issues. They're totally inseparable. So I call trading psychology is really behavior. Your behavior in the market is very important. Your behavior in life is very important as well. But there's a big difference between psychology, such as that of Sigmund Freud, and behavior. Trading is about behavior, which can affect your psychology, but don't let your psychology affect your behavior. Your behavior is specific and fixed, and we know there's certain things that work in the market, and certain things that do not work and never will.
All right, Jake, I want to thank you. Thank you for all the work you've put in with us over the years. Thanks for putting up with us and me in particular over the years. Absolutely enjoy working with you. I appreciate all the stuff you've done for not just me and Metastock, but for the community and just pushing trading forward. So thank you.
It's been a pure pleasure, and I want to apologize to everyone for my lack of voice. The allergy season here in California is the worst ever, but hey, I'll be better next time when we meet.
Thank you again, Jake. You can find out more about Jake. You can kind of follow the research. You can actually subscribe to his weekly publication that he's been doing since the 70s, www.trade-futures.com. And if you haven't yet, make sure you join the Traders Forum, thetradersforum.com. Thanks for watching the YouTube video. If you're watching the YouTube video, thanks for being here. If you've been here, really appreciate you. And we'll see you again very soon. Thanks.
Thank you, Jeff. Thank you, everyone.